My name is Dominic. I'm a business development director for Europe for SONECT. And we try to disrupt the way how we get cash today. We've already started doing this in Switzerland, and we're already expanding to Austria and to two other countries, mainly Spain and Portugal in Europe. We're now here in this accelerator to find the right partner to start also growing into the United States. So basically, let me start with a story. Our founder, Sanipan, he was asked by his wife to bring back cash to pay the babysitter at home, and because both of them were working. So of course he was busy, and like his head was in the clouds, and he forgot about it. So she got angry at him when he got back, and he had to get out to get the cash. So first you have to know where the next ATM is. But as he was living in Bern, of course, it looked like this. So it was snowing, and so he had to first look for the ATM and then walk 800 meters, like on a street like that, and go get the cash. But on the other side of the road, there was a pizzeria where people were getting pizzas for takeout. And he saw that they were paying by cash. So what if you could get cash where others spend it? And you already know like the cashback system in the United States, of course. You can go and get cash back at the Walmart or Walgreens, so big chains. So what our value proposition is that we can bring this to your community, which means it's like your shoe store or your hairdresser, your bakery store, which is right across the street from where you live. And as it is a location-based app, you can just go like anywhere you are, open the app and see where the next cash point is. So in our environment, we have a three-party problem. So we have the consumer that sometimes do not know where to get the cash. Then we also have the banks that have to spend on the ATM, and it's like a costly thing to place an ATM. But also the retailers that have to spend time and money on the cash handling. So everybody says that cash is dead. But actually, it's not. It's 85% of the retail payments globally are still handled in cash. I mean, the US is a bit lower. It's already below 50%. If we update it, then it would be like maybe 45%. But even in Europe, it's almost like 65, like 2/3 of all the payments are still done in cash. And if we come to other places like Africa, Latin America, or Asia Pacific, the emerging market, then it's like obvious that there is still a lot of cash involved. So, like talking about the banks, of course, if you know, like that's the way we get the cash right now. But to place one of these ATMs, it's really, really expensive, and the banks have to spend it to the installment, but also the operating cost. But with every transaction, there is an interchange fee if people go to other ATMs. But still, there are costs involved if like the customer of their own bank go to their own ATMs, which is about $1 to $1.50. Which the bank have to pay. How we do it? We monetize the existing infrastructure. So same as Uber did or Airbnb, like Uber did not reinvent the taxi industry, just make it more simple and more convenient to get a ride wherever you want to go. So we want to do the same. So with SONECT app and a retailer that has cash who wants to deposit the cash, any retailer can be a virtual ATM. So this is our solution. For the consumer, it's much more convenient and handy to get the cash. For the bank, not only can they save costs, but also expand their network and get closer to their retail and business clients. And also for the retailers, there's less cash to handle, and even they can earn a commission. And what's more important, especially for the small retailers, that they can increase foot traffic, which means more people come to the store, and maybe they don't even know the store, even if it's right across the street, but still they don't know because they go right into their car and go to work and come back. So they don't really spend time in their local community. So if we see how the cash is like cycled today, if I want to buy something, like it starts here. So the money is in the bank. So the bank has to fill the ATM. I then have to go to the ATM to get the cash, and I will bring it back to the retailer. And the retailer will then bring it back to the bank. With our solution, we call it a cash recycling We get rid of the above 3 steps, and it's just been recycled within, like from the retailer to the consumer, and the banks have less cost. So how does our business really work? Oh, now it's like the old one. Now it's in Swiss francs. Sorry for that. That's so basically the numbers that we took from Switzerland, how it works there. So there's an interchange fee of 2 francs, which equals $2. We cut this in half, and then like this is paid by the banks, like for us being like or expanding the network, and we share this with the retailer. They are the ATMs to the banks, so they're ultimately providing that service. So who are we? Like, as I told before, Sandy Pan, who was the founder, who came up with this great idea, and Arindam, they were both with Credit Suisse for more than 20 years. I was with UBS for 4 to 5 years, and also Rick, he built like the whole business development, like the internationalization for Gate Group. And of course, we are a lot of people that like are really motivated and really want to bring this forward, and also now bring it to the United States. So, being said, like this, with SONECT, you can get the absolute convenience. Thank you.
Any questions for Dominic? He'd be delighted to provide a demonstration for anyone, obviously offline here, but it's an interesting solution.
Who does your settlement out of that? Work with the bank or with the banking association? What do you do?
Well, basically, the goal is to be integrated with the bank. So, which means it's either on our app, and like you can have your bank account as a payment method, or you can be, or SONECT can be integrated into the mobile banking app of an app or of the bank.
So your customer would be a bank, and the retailers are customers there.
Well, basically, just to say, like, we are integrated with the banks, and how it works then is like we debit if the transaction is confirmed, we debit the account and put this into our transaction account. So we're running like on separate rails. We take the money out of the account of the customer and put it onto our transaction account within that specific bank. And we issue e-money at the same time, which will be transferred from the user to the merchant. And this will then be settled like once a week. So basically, we have a B2B to C model. So of course, we want the banks as our main customers, but also we need to have the network, which also is about the retailers, but also about the small shops. So we will be reaching out to the banks and to the big retailers, but we rely on the banks, like the community banks, to bring our service to the community, which means to their business clients, like their small and mid-sized enterprises. But also, of course, like Uber did not onboard all of them themselves, so they can just register themselves on the app, like the users, but also the small retailers.
Did you say the banks are responsible for marketing to the small retailers and consumers? Or how do you actually get this? It seems like you could get a few large contracts at Walgreens or something like that.
Exactly.
How do you also get the pizzerias?
Yeah, that's exactly like through the banks, which means that they leverage their own clients, because it's also beneficial to them, because then they don't have to handle all that cash of these retailers. Maybe we don't bring it down to like non-deposits of like these pizzerias and all that retailers, but maybe we bring it down from 6 to 4. So it's also for the banks like 1/3, which is safe, that they don't have to handle the cash anymore, like to move it around.
How would, say, your cap be for someone who wants to say withdraw more than say $500? How would you handle? I mean, what's your cap for a transaction?
Well, we have to find out like with the regulator how this would work, but basically the bank could set the limit, of course. I mean, if we are integrated with the bank, and it will check like the amount which is on there. If you don't have the money, you cannot get the cash.
Oh, I understand that, but I just mean as far as a cap, like what
For the retailer, you mean?
retailer would be able to
Okay.
absorb, in a regular business day for their operating costs.
Mm-hmm. Well, on the app, you can set like a maximum transaction amount that you want to offer. And it's also like a live feed. So it starts maybe at $200, and then if it's a smaller shop and it doesn't like a lot of card payments, but also like a lot of cash going out, so maybe he cannot pay out like 200 to everybody. So he just lowers it to 100 or to 50. And this is like, you can just do it in the app. Or you can just, as a retailer, you can just close your shop in the app, which means you're not visible anymore on the map. So you just, like on the user side, you open the app, the map, and then you can see like where the next shop are. And so if he closes the shop, you're not visible on the map anymore.
The merchant can actually set the limit of the inventory of cash available to the customer, right? So through the POS system or through the app, they can say, hey, I've got $100 available, right? Wherever the request is made. And if they don't have any cash, they can close their store or close it as far as the app is concerned. I think that answers your question.
Right.
You alluded to the trend moving away from cash. What is your play as far as the business model in the next 10, 15, 20 years? Are you building a business that's slowly gonna like work itself out with the market?
Well, yeah, but how long does it really take? So if we also say like 15 years, I don't know if it's in 15 years. I mean, if you take the example of Denmark or Sweden, which are really, really like cashless countries, so it's like 90 or 85 or 90% are done cashless. We even have like requests from banks over there because the only official payment method in every country is just cash. They don't have to like maintain a system of electronic cash transfer. They do, but they don't have to officially. So like the marginal costs for that like existing network for the cash, like the marginal costs are rising. So like, it takes a long time to do this. And of course, if we have the network, you can just do anything else. You can also include like payments here at some point. We don't want to at the moment, but I mean, you already have the network, and I mean, there's a lot to do once you have it.
We've only had a few banks come through here so far, but the reaction to something that would allow them to lower or minimize ATM costs gets a reaction from the bank. And I'm thinking you might ask that question that you just asked, Steve. That's a good one, but you could see where the eventual distribution would be, or evolution of it would be. There are, in some markets, there would be no ATM. You know, the bank would say, we're not going to do it at all because you can get the cash from any merchant. So it actually probably evolves to a pretty practical kind of solution like that.
Yeah, I think that's a great point. One of the things we've learned from our friends at Bucket is the cost of cash, right? For a bank, it's about 9.1%, quoting correctly, transition. So there's a lot of cash that obviously when you get to the cost of an ATM, there's the CapEx cost of it, there's filling it, there's the cost of space, right? In some instances, leasing space to have an ATM in play. And then the question is, it's like even as we stand here today, does anybody know where the closest ATM is? It's probably a few blocks away at the very least. But what if I could go to Samantha's or I could go to Threefold and get a little bit of cash or even to the military store? So, it makes everyone an ATM from that perspective. And from the merchant's perspective, additional foot traffic. If you give me some cash, there's some likelihood I might spend it in your store, right? So that's a good plus.
I may have just zoned out on this, but there's another little used purpose for the ATM, but it's something that costs the bank a lot, which is deposits. Look at, instead of going to the bank to make a deposit, I go to a merchant, I've got, $200 cash, I really don't want to carry it around. Stores obviously do a lot of that, that's where a lot of it comes from. Part of it is just a lot of the stores that collect a lot of cash, they just won't go make deposits, they'll be dispensing it to all the people with them for the ATMs. But have you thought about getting the flip side?
Yeah, of course, you can do this as well. I mean, the question is whether the merchants really want to do it. Then maybe it also depends on the cost or like the commission that they will earn to offer it. But of course, you could also do the reverse thing.
What is your competitive advantage when the really big, competitor comes in and tries to like you out?
Well, basically, I mean, Walmart has the same system. But I mean, our benefit is that you can get it everywhere. We can also be international. So if you go over to Europe, or I don't know, from here to Alaska or whatever, you can just go there and use the same service. So you would have to establish like the network first. And usually it's really like some of these players are like locally or like in a country or whatever. And so our really value proposition is that we can scale this on a global basis, and you can use it everywhere.
Your shop doesn't have to have an account to say bank this weekend, right? But the
No.
typical customer has to have an account, right? So the bank may also be able to do it.
Exactly.
Is your app is it private label or is it your one?
Well, we built all ourselves, but I mean we can like offer co-branding, which we already do with our customer bank in Switzerland, which means you have like up there you can see the logo, and if you're in Alaska, if you're in California, and your account is with a local community bank, which is here in Little Rock, you still see that this service is provided by your bank.
Yeah, I think it's to their advantage to sustain their brand, sort of the Intel inside. So if you were a merchant shop, would you have a SONECT logo on the outside? Service provided by, sort of.
Like Visa, Master.
Exactly.
Yep.
Right, but in order to create that ubiquity and really add value, I think people want to see the little colored SONECT logo. That's a good thing.
Okay.
Can only one bank occupy one cash point, or can there be like multiple banks? Let's say, like the example that Monica gave, that the bank, the one merchant banks with XYZ Bank. Can like there be multiple banks that are as like part of that one cash point? If it's a really like cash point demand, and so, or is it like, does that one merchant or one bank have like one outlet of that cash point?
I don't know if I get it right, but I mean, if you think about actual ATMs that there are now, maybe they're like I don't know, Bank of America ATM, but still, if you can go with any bank card, you can go there and get cash. So this is the same. It's just like an ATM, and everybody can go there. It doesn't matter like what bank you're with, like not from a consumer side, but also not on a merchant side.
Is a consumer charged a different price though? Like if I don't bank with a bank.
We will not charge the consumer.
Any other questions? No, thanks.
Thank you.
Richard, you want to get yourself set up? So next up we have Richard, who's from PYT, which stands for Pay Your Tuition. The folks at PYT, I didn't, you learn a lot in the process of selecting companies for this program, and I never realized how many people are unable to graduate from college because they have this gap of money that was required of them at the end of that transition point through school, where somewhere between $3,000 to $5,000 to pay that home that they had to call on. Obviously, get a better job and that sort of thing. So PYT is addressing this issue from a community perspective, from a CRA credits perspective, et cetera, and he'll talk to you a little bit about this in a few minutes. That's Richard coming to work this morning. Maybe just in time.
What's going on here? It's not. Here's the slide on my computer, but it's not translating over. It's what's this?
Maybe you got to change your screen there. Do we have this? Is this on Dominic's computer? We can try that too. So.
Let's see.
Where's your screen button there? So. Does this change screens?
Makes it smaller. It should be displaying. That's my
Yeah, it's not popping up there for some reason.
questions, settings.
Do we have it on Dominic's computer?
I don't think so.
Where's your?
usually just pops right up.
Go to your settings. Do you have it on Dominic's computer? So
I can try to email it to him. Let me see here.
here, let me see if I can.
Sure. Sorry.
With a small or
Do you have it on there?
and then S-E, S-E, like this, right?
Yeah.
Just unplug it. You think you got it?
Is that it?
It's extending, so
What is extending screen and crest?
that's usually when it flips over. Display.
We're still not seeing internal display. Okay, this is starting to piss me off. There you go. And then where's your document?
Here. There we go. Perfect. Yeah, just black screen. Thank you.
Okay. All right, here we go. Thank you.
Okay. So, technical difficulties. Thank you everyone for coming this morning. My name is Richard Adams. I am with Pay Your Tuition, and I am a co-founder. So the main problem that our company is addressing, we are very familiar with it, is that tuition for all Americans across this country continues to rise, while funding for tuition from the state, federal scholarship programs has remained stagnant, hasn't grown. So what that has created is what we call a tuition gap. A gap of about $5,000, as Wayne was stating earlier, that really prevents students from getting across the stage. So before I talk about the market and how we're going to fix this problem and obviously make money while doing it, I want you to take a look at this young lady. Her name is Francina. She's our student zero, which means she was our first student that we helped a few years ago. She's a thriving young lady now. She graduated from college. She was a great student. She volunteered. She worked 2 jobs. She was really doing everything that she needed to do to further her life. So let's see here. Is this going to work? So she even got internships at some of the most prestigious broadcasting companies out there, Voice of America. She used her summer times to volunteer, to help build homes from the homeless. And then she eventually graduated. So she did what she needed to do. But this is Francina a few years ago when we met her that first night. You can see that she's not the effervescent young lady that we just saw before. She's stressed out. She's worried about how she's going to pay tuition. She's worried about getting kicked out of her dorm. She's worried about fulfilling her dream to get an education and to pursue her career. And how we met Francina was that she was crowdfunding a portion of her tuition. And so these are some screenshots of some students that were successful on crowdfunding. But as you can see, they have high goals, $20,000, $63,000, and they're really only getting to about 20% of what they needed to raise. Francina, and these are amazing students. They have amazing families, and they're surrounded by amazing communities, people that obviously have money and believe in their dream. Francina obviously did not have any of that, but she tried it anyway. And what started to happen was she was actually getting bullied on the GoFundMe. People were giving her criticism and advice, saying, why don't you go to a cheaper school? Why don't you work 2 jobs? Why don't you do this? Why don't you do that? They didn't realize that she was already doing all of those things and still coming up short. This is Francina and her mom. Her mom has faced some challenges and couldn't be the co-signer on the private student loan that Francina needed. But she was willing, she was present, and she was trying to do everything she could to get her daughter across the stage at Howard University. So they started to apply for private student loans, and this is really where the problem starts to arise. They are applying for different private student loans, trying to get the money that they need, and every single time they're denied. Every single time you apply for a private student loan and you're denied, the odds of you for applying for the next one actually goes down. And so here is a local banker. They're frustrated because they don't have the products and the services that their clients need at this time. So he's trying to figure out how can I get Francina this money? How can I find her a scholarship? How can I make sure that this young woman in a bank that and is an underserved community succeeds? They don't have the products. So we decided to start innovating that. We started to think about, well, what if we removed Francina's mother and all parents from private student loans? How could we get Francina qualified for her own private student loan? So we started to look at predictive data from social media. We started to score the students. We started to take in consideration that she was working, that she did have good grades, that she was doing a major where she can come out and be employable immediately. And we quantified all that information and turned it into a score so we can make a really great recommendation to our banks based on normal mitigation practices that they were already following. So that is how PYT was born. We decided to focus on the student and see if we can qualify them in a different way by making bank recommendations. So you may not have realized, so obviously Francina is from a challenged background, but as we continue to do research, we realized that this wasn't an issue where minorities just faced it or people that were from low-income families faced. This is actually an American problem. So the average income of a family that needs a private student loan is about $80,000. And in most cities, most of America, that's actually a pretty good amount of money. But these are still families that have challenges. They may have more than one child that's college bound. They might have already taken out private student loans. They may have already exhausted some of their credit lines, and they can't afford to send their other children to college. So why is that? They may have no credit, or they've overextended the credit. They can't find a cosigner, so mom, dad, grandparents can't do it, or they don't have enough collateral. Also, the market for the private student loan is right now it's about $120 billion, but that's only because 30% of those who apply for private student loans are actually approved. So this is how we predict success. We look at the student's social media across LinkedIn, Facebook, Instagram, and we start to build a profile. We start to really get to know the student so that we can make a recommendation to our bank. We score them, and it enhances the traditional FICO. So how we make money is PYT forms banking relationships, and we take and package it and market all of our students to our banks. We get the student to apply, and then the bank actually pays us a fee for that application. Additionally, we make money off the origination of each loan. We tag the loan over the life of the student's education career, so if they go back next semester or next academic year, that student still is with us if they go and get another private student loan. So this is our team. This is our amazing CEO, Stacy Wesenot. That's myself up there. I was a PYT student. I didn't have enough money to go to college. My parents were very upfront with that. I have 2 younger brothers, and I actually started this process myself. I didn't know how to weave everything together the way Pay Your Tuition has, but this is a model that we can replicate and that we can package and turn into a business, which we have done here. One of the main ways that we want to do that is get access to low-cost dollars. All banks across America are statutorily obligated to reinvest in the community. It's more normally called their CRA dollars, or Community Reinvestment Act. Most of those dollars go to first home ownership, but we want to take some of that money and start funding other programs so that we can get it into the hands of students like Francina and other students in the middle class who don't qualify for economic need-based aid. Currently, we have 2 partners which we are building products around. We have a live platform We've helped about 6,000 families, and we can lend to about 1,800 schools across the nation. So when we talk to our students, we come in we reach them when they have the most urgent need, when they need that last, $5,000 in their final years of college to graduate. Oops. Let's go back one more. Oh, it jumped ahead of me. So continuing to have technical problems, I'm sorry. So basically, what we want to do is we want to fill the tuition gap. We want to make sure that all students have what they need to get across the stage and to graduate. Thank you very much.
Questions for Richard?
Yes, Stephen.
This comes from the perspective of high school students. Thank you for attending our event the other night.
Thank you.
I know that a lot of my students have moved here completely or have never been on Facebook. They use Twitter just for fun. They don't have LinkedIn profiles. As those students now are seniors and are moving into this demographic, how have you seen, you have some early traction
Right.
with your experience, how have you seen that effect? And how do you keep students from gaming the system once they realize, hey, I can get money for school? Because our kids will figure it out.
Yeah.
If they can.
Yeah.
So what are the kind of ways you
I oversimplified it, but basically we do have an API. We're building it off a European API called Friendly Score. And so we do look at a lot of predictive data. So if you set up a LinkedIn account tomorrow, it's not going to be weighted as heavily as another student who has really been using that platform and Instagram. Everyone has an online persona, and we look at a lot of different data points, several hundred in fact, to start building our profile. And then of course, when the student comes to us and they're on our platform, they start to engage with us, and we start to learn more and more about that student and figure out how to lend to them. Yes, sir.
You look at grades as well, right?
Yes, absolutely. We definitely look at the academic performance of these schools, of the students, and at the schools that they attend, the majors that they have selected, and that's how we start to build that profile as well. Yes, sir.
Is this only for four-year colleges and bachelor's degrees?
It is. Yes, right now it's only for four-year universities. The data that we started to gather around two-year universities, those students face additional challenges that we're not yet prepared to address. We are thinking about that. We're also thinking about different trades and technical schools and coding schools that can help students, because not every student is a college-bound, a traditional college-bound student, but right now we're focused on four-year universities or four-year college seekers. Yes, ma'am. We do get a lot of international students that are looking to get access to private student loan. Right now, we're focused on the American problem. My cohort colleague Dominic goes to a prestigious university in Switzerland. He pays about $700 a semester. That is not happening here. So we're really focused on American students. We do get a lot of international students, and we have forged partnerships with companies that are set up to help students. One of them, for example, is called Prodigy. They help students that are studying certain degrees like business, tech, and then they help fund those students. So we do filter those students appropriately, but right now we're focused on American students. Yes, that's a different company, and other companies are focusing on that problem as well. So we have partnerships and we know those people, and so if we get an international student and they don't have a green card, they don't have citizenship, then we will obviously pass them along and move on to the next student. Yes, sir.
Don't you have a leverage for your bank partners with the CRA? Talk about that.
Yeah, absolutely. So the CRA is low-cost dollars, and what we want to do is get access to these dollars and start to innovate and build products around it. One of them, which is trademark pending, is called a loanership. So what we've done is combined the power of a scholarship and a loan, and made it one product, which is something that students and their parents are looking for. So they don't mind taking out loans. They oftentimes don't get enough in scholarships. So we said, hey, we're going to loan you the money, but on the back end, we're going to use our CRA dollars and money that we raise to, once you stay current and make 12 payments on your loan, we will find a way to pay that those monies off. The problem with scholarships is, even for high-performing students, they come in, but they may not come in time to save that student from dropping out of school, having to take on a second job, and it affecting their grades. And if they're already an academic scholar, if you're diverting your attention by working two jobs, then inevitably your GPA may drop, and other scholarships and grants that you have earned for your academics will be in jeopardy. Yes, sir?
One slide where you blacked out mom,
Mm-hmm.
you get around the whole dependent situation for students, because a lot of times that is actually fundamental in terms of students getting access to funds, whether it be through FAFSA or
Mm-hmm.
private sector. How are you getting around that aspect?
We work within the confines that are already there. So all of our students do the FAFSA. They qualify for as much student aid as possible. And then when we remove the parent doesn't go away. We're just not taking them in consideration when we're looking to lend to them. So lend to the student rather. Does that answer your question? So we don't get around mom. We don't get around the parents. We just use their resources in a different way where they're not actually linked to the debt. So Francina's mom still provides support financially, but the cost that she can't cover, that extra $5,000 is something that we help with.
Thank you, Richard.
Thank you.